Record-breaking travel demand, rising credit inquiries, and a sector that just reclaimed its pre-pandemic workforce. The world of sport is giving America a lot to celebrate lately. The NBA championships, the FIFA World Cup, and those two events alone are drawing travelers by the million to the US, where the leisure and hospitality industry is enjoying a hot summer. With almost 140,000 businesses in the hotel, RV, campground sector, and another 60,000 sightseeing and travel services businesses, few industries can illustrate the strength of consumer demand better than travel. After expecting record high travel on Memorial Day weekend, AAA now projects that 72.2 million Americans will travel during the Independence Day holiday period this year, setting another record and surpassing last year's historic total. Combined with the FIFA World Cup taking place across North America and celebrations surrounding America's 250th anniversary, travel activity is receiving an additional boost that's creating opportunities across the sector. The impact is already visible in the employment data. Leisure and hospitality employment has surpassed its pre-pandemic peak, with more than 17 million Americans currently working in that business. After one of the most dramatic disruptions in modern economic history, the industry has fully recovered its workforce and continues to expand. However, challenges remain. The sector's unemployment rate stands at 5.8%, above the national average of 4.3%, and this suggests that while hiring has recovered, labor market dynamics remain more volatile than in many other industries. Another challenge comes from rising costs. The travel price index increased 9.8% year over year, more than double the overall consumer price index. Much of that increase was driven by transportation expenses and fuel costs, which surged more than 40% compared with a year ago. Looking at commercial credit, Experian data shows average commercial credit inquiries per business within leisure and hospitality have increased from 0.07 to 0.21 since January of 2023, representing more than 181% growth. Much of that activity is being driven by hotel development and expansion projects as businesses position themselves to capitalize on sustained travel demand. Perhaps most encouraging is the sector's overall credit performance. While delinquency rates tend to fluctuate more than those of other industries due to sensitivity to fuel prices, labor costs, and consumer spending patterns, commercial credit scores remain stable across subsectors. This suggests a resilient industry that has learned to adapt to changing economic conditions while maintaining credit quality. For chief risk officers, lenders, and risk managers, the takeaway is clear. Demand remains strong, investment activity continues to rise, credit quality remains stable. But profitability will be increasingly dependent on how effectively businesses manage rising labor, fuel, food, and operating costs while continuing to deliver value to consumers.